Hi guys, good morning everyone. Today our discussion is more on BCG Matrix. It's strategy formulation, more on matching stage. So let's start. So this is the BCG Matrix. BCG means the Boston Consulting Group, or BCG, was founded in 1963. It was a pioneering consulting that introduced influential concepts such as experience curve and the growth rate matrix. The experience curve concept held that total costs would decline by a certain percentage every time cumulative production is doubled. This idea is for corporations to expand aggressively their capacity to focus on cost minimization and seek higher demands, often by keen price competition. However, when inevitable market turndowns occurred or innovative products were introduced, the flaws of this approach became apparent. Companies found themselves with excess capacity and outdated product design as well as reduced capacity for innovation given their previous focus on cost cutting. Boston Consulting Group, or BCG Matrix, is a four-celled matrix developed by BCG USA. The Boston Consulting Group shows growth matrix in among the best known of this approach. In the BCG approach, each of the firm's strategic business units, or SBU, is plotted in two-dimensional grid in which the axes are relative market share, and industry growth rate. The grid is broken into two quadrants, and it is the most renowned corporate portfolio analysis tool. The growth share matrix viewed companies as a portfolio of businesses and was intended to help senior managers identify the cash flow requirements of different businesses and take resource allocation decisions about them. When using the growth rate matrix, businesses are grouped in strategic business units, or SBU, and are mapped on a matrix along two dimensions: industry growth rate, relative market share. The SBU are then divided into stars, question marks, cash cows, and dogs. According to the BCG matrix, business could be divided into high or low, depending upon their industry growth and relative market share. Relative market shares means SBU sales this year leading competitors' sales this year. Market growth rate is industry sales this year minus industry sales last year. The dimensions of business strength, relative market share, will measure comparative advantage indicated by market dominance. The key theory underlying this is existence of an experience curve, and that market share is achieved due to overall cost leadership. So one of the components of BCG matrix is stars. They are SBUs competing in the high growth industries with relative high market share. These firms have long-term growth potential and should continue to receive substantial investment funding. The next one is the cows. They are the SBUs, or strategic business unit, with high market shares in low growth industries. So these units have limited long-run potential but represent a source of current cash flow to fund investment in stars and question marks. Question marks are strategic business units competing in high growth industries but having relatively weak market share. Resources should be invested in them to enhance their competitive position. Dogs are strategic business units with weak market share in low growth industries. Because they have weak position and limited potential, most analysts recommend that they be divested. Cash cows business unit will reach their profit target easily. Their management have an easy job. Even worse, they are often allowed to reinvest substantial cash amount in their mature businesses. The BCG matrix method can help to understand a frequently made strategy, missing having a one-size-fits-all strategy approach. such as generic growth rate or a generic return on capital for an entire corporation. Dog business units are fighting an impossible battle, and even worse now, and then investment are made. These are hopeless attempts to turn the business around. As a result, all question marks and stars receive only mediocre investment funds. In this way, they can never become cash cows. Inadequate invested sums of money are a waste of money. Either these SBUs should receive enough investment funds to enable them to achieve a real market dominance and to become cash cows or stars. Otherwise, companies are advised to disinvest. They can then try to get any possible cash from question marks that were not selected. So BCG assumed that competitors with larger market share would have the lowest cost and higher profits. In growing markets, a company should try to capture most of the growth by growing faster than its competitors, so that when growth slowed down, it would emerge as the highest share competitor. Based on this assumption, the strategic implication of the BCG matrix were that cash from cash cows should be used to support selected question mark and to strengthen emerging stars. The weakest question mark should be divested or liquidated. The company should exit from the dog industries. The company should have balanced portfolio of stars, cash cows, and question marks. So next is the relative market share. Relative market share indicates the cash generation. Higher the market share, the cash generated will be more. According to the BCG matrix, it is assumed that these earnings will grow faster the higher the share. The question of what is a higher market share is a debate. The best evidence is that the most stable position is for the brand leader to have the share double that of the second brand and triple on that of the third. By choosing the relative market share, it shows where the brand is positioned against the competitors and indicates about the future of the product brand as well. Application of BCG matrix in a corporate portfolio. So first, the portfolio analysis provides a snapshot of the business in a corporation's portfolio. Second, the expertise and analytical resources in the corporate office provides guidance in determining what firms may be attractive acquisitions. Third, the corporate office is able to provide financial resources to the business units on favorable terms that reflect the corporation's overall ability to raise funds. Therefore, the corporation is in better position to allocate resources among the business units according to prescribed criteria. Example is using cash cow to fund the promising stars. Number 4 is the corporate office can provide high-quality review and coaching for the individual businesses. Number 5 application is portfolio analysis provides a basis for developing strategic goals and reward evaluation system for business manager. For example, manager of cash cow would have lower targets for revenue growth than manager of stars, but the former should have higher threshold levels of profit targets of proposed project than the manager of stars businesses. Cash cows understandably would have the reward more on the basis of cash than their business generate than would managers of stars businesses. For example, managers of cash cow would have lower targets for revenue growth than manager of stars, but the former would have higher threshold level of profit target on proposed project than the manager of star businesses. Cash cow understandably would have rewarded more on the basis of cash that their business generate than would managers of stars businesses. Before we use the BCG matrix, let me reiterate the following limitations, or we may say its disadvantages. First, BCG matrix uses only two dimensions. It can be relative market share and market growth rate. Number 2, problem arise while getting data for market share and market growth. Number 3, higher market share does not mean profits. all the time. 4. Business with low market rate can be profitable too. Number 5, it neglects the effect of synergy between business units. Number 6, market growth is not the only indicator for attractiveness of the market. 7. This is no clear definition what constitutes a market. And number 8, the model neglects small competitors that have fast-growing market shares. This is the end of our discussion of BCG Matrix, and I hope you understand our lesson. And this one is, again, this is part of strategic management under strategic formulation. Thank you and God bless. Again, this is Ma'am Ching.